Are you looking for better investment opportunities than just holding cash? In a world where inflation is a reality and cash devaluation a possible outcome, it's prudent to explore a plethora of investment avenues. Diversification is the name of the game. It's not just about stashing your money in a savings account anymore. Instead, it's about identifying assets that not only appreciate in value but also offer returns that can outpace inflation. Whether it's the charm of real estate or the allure of the stock market, the finite appeal of land or the digital promise of cryptocurrencies, there's a broad range of options that could potentially safeguard and grow your wealth. From traditional stores of value like gold and silver to unconventional investments like art and livestock, the possibilities are vast. So buckle up as we journey through the financial landscape, exploring 15 assets that can offer better returns than cash. First on our list are real estate and land. These two assets have been the cornerstone of wealth generation for centuries. Why, you ask? Well, it all boils down to their limited supply. Just like gold, the amount of land and real estate available on this planet is finite. And as the old saying goes, they're not making any more of it. Real estate in particular has always been seen as a strong store of value. It's a tangible physical asset that you can see, touch, and even live in. Over time, property prices have generally increased, often outpacing inflation. This makes real estate a sound investment choice, especially in times when the value of cash is eroding due to inflation. Then there's land. A patch of earth might not seem as glamorous as a high-rise apartment, but its value should not be underestimated. The demand for land, particularly outside urban areas, has been on the rise. The shift towards remote work has further fueled this trend. People are no longer tied to city centers for their jobs. They're moving outwards, seeking more space, more nature, and yes, more land. And let's not forget that land is versatile. You can build on it, farm it, rent it, or simply hold on to it and watch its value grow. It's this versatility combined with its finite nature that makes land such a compelling investment. But as with any investment, it's crucial to do your homework. Location, local market conditions, and future development plans can all impact the value of real estate and land. It's also worth considering that these are typically long-term investments. They might not offer quick returns, but over time they can provide a steady stream of income and potential capital appreciation. So, real estate and land can be a solid way to protect and grow your wealth. They offer a hedge against inflation and a chance to reap the benefits of increasing property and land values. In an uncertain economic landscape, these assets stand as enduring beacons of stability and growth potential. Next, we have stocks and superior currencies. In the financial world, stocks are no strangers to investment conversations. Despite being at an all-time high, the stock market remains a compelling investment frontier. Index funds, particularly the S&P 500, are an appealing option. Why? Well, they give you a piece of the pie from the top 500 companies in the United States. These companies range across various sectors, giving you instant diversification and a chance to ride the wave of their collective success. Now, let's not forget about the potential of investing in superior currencies. In a world where the value of the US dollar can fluctuate, diversifying into stronger currencies is a savvy move. Think of it as a financial insurance policy. For instance, the Swiss franc is often seen as a robust currency due to Switzerland's stable political and economic climate. Investing in superior currencies is not about turning your back on the US dollar, but rather it's about adding more tools to your financial toolkit. Just like how a carpenter wouldn't rely on a single tool to build a house, a smart investor doesn't depend on one currency or asset. This strategy of diversification can protect your wealth against the devaluation of the US dollar. It's like having a safety net, ready to catch you if the dollar starts to fall. And even if the dollar remains strong, you're still in a good position because you've spread your wealth across multiple currencies. In a nutshell, both stocks and superior currencies offer unique advantages. Stocks give you a stake in the financial performance of thriving companies, while superior currencies provide a buffer against currency devaluation. Both are valuable components of a diversified investment portfolio, each offering a level of protection against inflation and the unpredictable nature of economic trends. Diversifying into stocks and superior currencies can provide a hedge against inflation. After all, in the game of wealth preservation, it's always better to have more cards up your sleeve. Moving into the digital space, we find Bitcoin, altcoins, and non-fungible tokens, or NFTs. Bitcoin, the first and most recognized cryptocurrency, has been a game changer. It's been lauded as digital gold and an effective hedge against inflation. Over the past decade, Bitcoin has outperformed traditional assets, including stocks and gold, and its value has skyrocketed. Its success has paved the way for other cryptocurrencies known as altcoins. Altcoins, short for alternative coins, are all cryptocurrencies that came after Bitcoin. Some of them, like Ethereum and Litecoin, have carved out niches for themselves. Others have been developed for specific uses or industries, creating a diverse and dynamic market. Despite their volatility, these digital currencies have potential for substantial returns, making them an intriguing option for those willing to take on higher risk for potentially higher rewards. But the digital asset revolution doesn't stop at cryptocurrencies. Enter non-fungible tokens, or NFTs. Unlike cryptocurrencies, which are fungible and can be exchanged on a one-for-one basis, NFTs are unique. Each NFT represents ownership of a specific item or piece of content. This uniqueness is what gives NFTs their value. NFTs have been making waves, especially in the creative world. They've been used to sell digital art, music, and even tweets for significant sums. For instance, a digital artwork by the artist Beeple sold as an NFT for a staggering $69 million. Beyond art, NFTs hold potential for revolutionizing property rights and other aspects of digital ownership. However, like all investments, cryptocurrencies and NFTs come with risks. Their value can be volatile, and the regulatory environment around them is still evolving. But their potential as innovative and high-performing assets is undeniable. In conclusion, the digital asset space with Bitcoin, altcoins, and NFTs offers a new frontier for investment. It's reshaping our understanding of value and ownership, and despite the risks, it's an area that forward-thinking investors are increasingly considering. These digital assets have revolutionized the investment landscape and are worth considering. Let's not forget about traditional stores of value like gold, silver, and platinum. These precious metals have been the bedrock of wealth preservation for centuries, with their value often inversely related to the health of the global economy. When economies falter, investors flock to these metals as a safe haven. Gold, the most recognized of the trio, is deeply ingrained in our financial systems. Central banks across the globe hold vast reserves of this yellow metal, a testament to its enduring value. Historically, gold has maintained its purchasing power, even as inflation rises or currencies fluctuate. In fact, an ounce of gold today buys you roughly what it would have bought you 50 years ago. Silver, often considered gold's more volatile sibling, holds its own appeal. It's not just a store of value, but also has industrial applications. Thus, it benefits from economic growth as well. Its dual role gives it a unique position in the investment landscape. Then we have platinum, the rarest and arguably the most precious of the three. Its rarity, combined with its uses in industries like automotive and jewelry, ensure a constant demand. It's a more speculative play, but can offer higher returns if the market conditions align. These metals are not just stores of value, they are also hedges against inflation. As the cost of goods and services increase, so does the price of these metals. They offer a tangible way to protect your wealth from the eroding effects of inflation. Investing in these metals is now easier than ever. You can buy physical bars or coins, or opt for exchange-traded funds that track the price of these metals. There are even digital platforms that allow you to buy fractional ownership of physical gold, silver, or platinum. In a world of digital currencies and tech stocks, these traditional assets might seem out of place, but remember, they've withstood the test of time. When financial storms brew, these metals have proven their worth as a safe harbor in uncertain times. Now let's delve into some unconventional investments like livestock, art, luxury watches, and handbags. Starting with livestock, this investment option may seem a bit out of the ordinary, but it's not uncommon in certain contexts. In fact, some investors find livestock to offer better returns than cash or even precious metals. The reason? Animals, particularly those bred for meat or dairy consumption, can produce a constant stream of income, making them a living, breathing asset. Moving on to art, high-value pieces can be an excellent store of value. Art, just like real estate or land, tends to appreciate over time. While it may not provide immediate liquidity, investing in art can be a savvy move for wealth preservation. Plus, it comes with the added benefit of aesthetic enjoyment. Next up, luxury watches and handbags. Now, this might seem a little frivolous, but believe it or not, certain high-end watches and handbags can actually serve as a good investment. Brands like Rolex, Patek Philippe, Birkin, and Kelly, to name a few, craft products that don't just hold their value, but can appreciate over time. Yes, that's right. That Birkin bag sitting in your closet could be worth more than its weight in gold. Remember, though, these unconventional investments come with their own set of risks and considerations. One must account for factors like authenticity, condition, and market demand. It's also important to have an exit strategy in place, as these aren't the most liquid assets. Nonetheless, if done wisely and with a well-researched approach, these unconventional investments can not only diversify your portfolio, but also potentially offer significant returns. They demonstrate that sometimes thinking outside the box can indeed be rewarding. As you can see, there are numerous unconventional avenues for investment that can yield significant returns. Our last set of assets include vintage cars and raw materials. Let's start with vintage cars. These aren't just vehicles, they're rolling pieces of history, and they can be an excellent investment. Classic cars, particularly rare models with historical significance, have a charm that transcends generations. When well maintained, these beauties can appreciate in value over time, making them a lucrative investment. A 1962 Ferrari 250 GTO, for example, was sold for a staggering $48 million at an auction. That's the power of rarity and historical value. But remember, investing in vintage cars requires expertise, maintenance, and a deep appreciation for automotive history. This is not a passive investment, but for those with a passion for classic cars, it can be an enjoyable and rewarding one. Switching gears, let's delve into raw materials. These are the building blocks of our economy, used in construction, manufacturing, and various industries. Investing in raw materials such as timber, metals, or petroleum can yield returns due to increasing demand. As the world population continues to grow, so does the demand for these resources. Consider timber, for instance. With the shift towards sustainable construction and the boom in the housing market, timber prices have soared. Or take lithium, a metal used in rechargeable batteries for electric cars. As the world moves towards cleaner energy, demand for lithium is expected to skyrocket. Investing in raw materials, however, requires research and understanding of global market trends. These investments can be volatile and are often influenced by geopolitical events and environmental policies. But for those willing to navigate these complexities, raw materials can offer a solid hedge against inflation and a unique opportunity for growth. In conclusion, both vintage cars and raw materials offer intriguing investment options. They underscore the importance of diversifying your portfolio and looking beyond traditional investment avenues. With careful research and strategic planning, these assets can provide unique opportunities for wealth preservation and growth. These assets offer unique opportunities for wealth preservation and growth. In conclusion, there are many assets that can offer better protection for your wealth than holding cash. Let's revisit our journey through the 15 assets that are currently outshining the allure of cash. We started with real estate and land, both of which have been steadily rising in value. These tangible assets are seen as a safe haven, especially with the shift towards remote work increasing the appeal of land outside urban areas. We then moved on to the stock market, a lucrative yet volatile investment arena. With a particular focus on index funds like the S&P 500, we highlighted the potential for significant returns. We also discussed the merits of diversifying into superior currencies like Swiss francs as a shield against the devaluation of the dollar. Our journey took us into the realm of cryptocurrencies, with Bitcoin and altcoins emerging as valuable investments in the face of inflation. We also touched upon non-fungible tokens, or NFTs, which are revolutionizing the concept of digital ownership. Next, we delved into the traditional stores of value: gold, silver, and platinum. These precious metals have historically held their worth over time, offering a hedge against currency devaluation. We then explored unconventional investments like livestock and high-value art, both of which can offer better returns than cash in certain contexts. Luxury watches and handbags, especially from brands like Birkin and Kelly, can appreciate over time, much like art. Vintage cars, particularly rare models with historical significance, have the potential to appreciate in value, making them a viable investment option. Similarly, raw materials used in construction and other industries can yield returns, due to increasing demand. Throughout this journey, we've underscored the importance of diversifying investments to protect against inflation and the devaluation of cash. Remember, in an inflationary environment, most tangible assets and investments offer better protection for wealth than holding cash. So look beyond traditional savings and explore the broad range of options available for wealth preservation and growth.